So let's jump into a few things here, guys. But first thing I want to talk about is a little bit about trading emotions and how you can remove fear from your trading experience. As you know, a lot of you guys do know, I started trading a small account in December. That was at a level where I didn't really care about the position sizes. And, not caring about taking a loss kind of allowed me to trade free of emotion for a month. And it ended up being the best month I had pretty much all year. So I want to talk a little bit about that. I'll talk about how I dug myself out of a $1.2 thousand hole yesterday morning. And then we'll cover the typical big picture key levels on the charts and talk a little bit about earnings. So something that a lot of traders don't do and can be tough to do is accepting your risk. Anytime you put on a trade, guys, you got to understand that, whether you go long, you go short, you buy stock, you buy options. Once you take that position, what happens to that stock after that is out of your control. There's nothing to guarantee you're going to make money. There's nothing to stop you from losing money. The first thing that you need to do, and the first thing you should ask yourself before you ever put on any trade in any stock, in any environment, is, am I comfortable with this risk? Me as an options trader, I look at it kind of like, am I comfortable losing 100% of this? If I put $1,000 into an options trade, the worst possible thing is that could happen is that I'm going to lose $1,000. And you need to ask yourself before any given trade, am I okay with that happening? When you can enter a trade with a mindset where you're just 100% at peace and you're 100% comfortable should that go against you, you've removed all the kinds of negative emotions like fear and greed and all the hesitancy. A lot of those emotions, the underlying cause of those is just driven by the fear of losing money. This is especially common in new traders who really tend to try to rush the process. You see videos, you see posts on Instagram, you see what's possible. A lot of new traders get excited and they try to rush the process. Those are the traders who end up losing money too quickly, and they're losing money they can't afford to lose. You also see a lot of traders take profits way too soon, or they'll take a trade and it barely starts to come against them and they'll exit right away. When if you look at the chart and the volume and the price action, there was no reason for them to get out of that trade. Now, I've done this a lot in the past as well. The reason you're getting out is just simply that fear of losing money. There's been so many trades in the past, a few years ago, I've done it myself where I'm trying to rush the process. I'm trying to make 10, 20 grand a week. So I'm putting huge, $5, $10, $15,000 position sizes on. And the minute, the chart comes against me, I take the trade off. Or the minute I get a little bit of price action in my favor, I take the trade off. And I go back at the end of the day, and I review those charts. And there was never a reason based upon what matters, which is the price action, for me to get out of the trade. So for me and a lot of other traders, the reason you're getting out too soon and you're taking exits way too quick is that you're just really fearful of taking the loss. You haven't accepted the risk that you've put on the table, and you're doing everything you can to avoid that happening. You're entering a trade now where your number one thought and every decision you make is going to be driven by, I don't want to lose money. And the worst thing is that traders still are shocked when they take a big hit. I get a lot of messages on Instagram almost daily saying, man, I lost $2,000 this morning. I can't believe it. I don't know what the hell happened. You did it to yourself. I've done it to myself in the past where I wake up, I check a pre-market quote, and the stock that I have a huge position in is down 2, 3, 4%. And you get sick to your stomach. Like you want to drop to your knees and you're just like, fuck, this is going to suck. Like this is going to hurt. As a full-time trader, that's the kind of shit that can push you into, depression. And the worst part is that you do it to yourself. I don't do that anymore. I'm never going to put myself in a position again where if I wake up like yesterday and NVIDIA has negative news and they're down 13% at the open. When I saw that news, I didn't flinch. I didn't get sick to my stomach. I didn't freak out. I didn't have any negative emotions. They were opening down 12%. My options were going to go to zero, but that was okay with me. Because when I took that trade, I had already accepted that risk. I had already said, okay, man, Worst thing that happens here is that you lose 100% of this. Are you cool with that? It might take a lot of negative shit for that to happen, but are you okay with that? That's a question you guys got to ask yourself. I lost 1.2 grand at the open when NVIDIA tanked yesterday, but I was okay with that. I knew that if shit hit the ceiling, shit hit the fan, that's what could happen. And I was okay with that. So this is something that, especially as you're a new trader, even if you've been trading for a few years, start to make this the focus of your trading. Don't ask yourself, how much should I put in this trade? Where you should be starting the whole thought process is, hey, how much am I willing to lose here? How much can I put into this trade where I'm not going to be driven by emotions? And if you're a new trader, guys, you need to find that risk. Whether it's $10, $20, $50, you shouldn't be focusing on how to put more money into your trades, but you need to focus on finding a level of risk that is going to have no emotions tied to it for you. It's $10, $100, $1,000. It's different relative for everyone, but you need to find that number. Because when you can find that number, let's say for a newer trader, it's $100. They're in a position, they're in a financial position where losing $100 isn't going to destroy them. You're going to be allowing yourself to trade free of emotions. As a newer trader, and even in your first 3, 4, 5 years, a huge part of the process of becoming a good trader is finding setups that work best for you. Do you enjoy day trading, scalping, swing trading, this setup, that setup? That's a huge part of the process and the journey that you have to go through. And you're never going to be able to successfully go through that journey if you're constantly taking trades off too soon and if you're constantly operating from a basis of fear. When I started that account in December that had 2.5 grand, every single trade I put on, I was 100% comfortable with losing all of it. As it stands now, that account went up to about 14, 15 grand. And at no point was I putting on more risk than I could afford to take. And the other beautiful thing is that in that account, during that run, I wasn't putting on any big sizes. At no given time on any given trade did I really have over $1,000. So that's what's possible with options, guys, when you put the time under your belt and that daily grind to find what works best for you and then perfect it. Most traders just simply don't reach that point. They don't go through those steps and make that little graduation because they're constantly operating from a standpoint of fear. You can make trading enjoyable, win or lose any day if you're not worried about losing money. So if your number is $100, you start there and you just trade that amount and you just continue to perfect your setups and you just slowly over time increase that risk tolerance. A few months from now, you're comfortable losing $250 at any moment. Pretty soon you're comfortable losing $500. Then you get to $1,000. And guys, when you can afford to lose $1,000 at any given moment, and you have a consistently profitable, setup, strategy, routine, you can make a few grand a week. If you can put $1,000 into your trades, you need a few decent, nice winning trades a week to make $1,000, $2,000. So the whole process isn't about how can I put as much money as possible into this trade and hit a home run. That's going to bring those emotions. If you're early in the process, first few years, that's how you can make this an awesome experience. Don't make it about making the big money. Find what's comfortable for you and then slowly go from there. All of us, I'm not there yet, but myself and all of you guys, if we can reach a point where at any given moment you can lose 5, 10 grand, you're going to be millionaires. That's the math behind it. When you have a strategy, when you as a trader, when trading is your business and your few go-to setups can consistently bring in profits on a weekly basis, it's just a numbers game. So that's something you guys should start to focus on. It's really made trading a lot more enjoyable for me lately. And I'm just not having any of those emotions. Regardless of which direction this volatile market's going, it's been a lot of fun. And I can take the hits on the chin because I'm accepting it beforehand. So with all that being said, guys, a few things to focus on today in the charts. Don't rush into anything. The market could do a whole lot of nothing today. The market could have a nice little rally to the upside before, tech earnings like Apple, or we could see a fade to the downside. So we're kind of at like this little, situation this week where everything's going to be dictated by the earnings in those names like Apple, like Amazon, like Facebook, et cetera, et cetera. So this is a week that's really going to require some patience. We kind of have this dark cloud hovering above us that could either move or it could make, a rainstorm. So I'm not going to rush into anything personally today, but the main thing I suggest, guys, like I always do, is just let's identify some key levels of support and resistance. So for me, in terms of the SPY, if we are going to try to make a little rally to the upside today, I'm going to pay attention to resistance at that level. So we bounced off that 266 plus level over here on the 18th. And despite the nice move to the upside on Friday there, resistance as well. So let's see today if we do trail up here to the upside a bit. If the market is strong enough pre-earnings to break through that level and kind of make a new recent high, or if that ends up being resistance again and you see some selling into the close. You can pretty much take that same setup, that same view here on the Qs. Let's see if they can get up here to that 165 level today. And let's see if big money wants to put money into technology before earnings. Major thing we keep discussing, guys, every single morning pretty much is the lack of volume. We have continued to trade to the upside since December 26 with below average volume. That's true on the Qs. That's true on the SPY as well. For any momentum to the upside to be sustained, you need periods of large buying coming in. Billions and billions of dollars just rapidly coming into the market for days on end. That's Wall Street. That's the big boys. They're not here right now. And if you guys look at charts historically, when we trail higher for, a few weeks on end with no volume, that typically doesn't, end up being a move that's sustainable. You see that there, you can see that there, you can see it here. So maybe big money is waiting to see how these earnings shake out, but market could really go either way here, guys. That lack of volume leads me to believe that if earnings are crappy, we could be headed right back down here to 250 plus. If earnings are good, let's see if that big money comes back. There is the possibility that, Apple and Facebook and Amazon and all these others have positive earnings, but maybe it's not enough for the big money to come rushing back. So for me today, guys, I'm going to take it easy, not necessarily run into anything. And the one thing I would suggest is focusing on names outside of, these earnings plays that have been seeing a lot of momentum. One name you can look at right now is Tilray. So Tilray, pot stock, has one of those names yesterday that was super strong despite the rest of the market not doing too well. As we see technology stocks continue to trade lower, if we do see money leaving technology stocks, pay attention for stocks that are starting to see above average volume. That's the thing to focus on. If big money starts to close positions and take money out of tech, where are they going to put it? Tilray was pretty interesting yesterday, so we'll see if today it can break out of this little consolidation here above, 86 plus. And then another name, which seems to be like this new star here in the market, is XLNX. Huge breakout here of this consolidation on massive volume. Don't know much about the stock, don't know anything about the story. I just know that a shitload of money's been pouring in here. So on a pullback opportunity, that might be something to consider. But like I said, guys, not too many actionable setups at the moment. This is a week that's going to require some patience. So no gambles, no lotto plays. Take it easy. Identify your levels of support and resistance. And I'll be with you guys in the chat room, and we'll see what the day brings us. So hope you guys have a good morning. Hope you all have a good day, and I'll see you in the chat room in a few minutes.